Hello everyone, welcome to BISP Solutions. I am Tanvi Arora, working here as a functional consultant. So in today's video, we are going to see the case scenario of the unidentified receipts with the account analysis method and with the prevent submission rule. Okay, so we will just see what is unidentified receipts first. Okay. So what are unidentified receipts? They are normally a temporary holding suspense account in which funds received but not yet identified as to which account receivable the amount should be properly assigned to are posted. It means that you have received some amount from your customer, but you are not able to find out to which customer it belongs or to which invoice number it belongs. Okay, so basically we put this balance temporarily in a suspense account, and when it is found out, we transfer it to the particular head to which it belongs. Okay, so unclaimed funds are credited to an unidentified receipts account where they will remain until claimed. So they will be in the this temporary account, that is a kind of suspense account in like unidentified receipts name. With this name we create this account, and because we have received money from the customer but it is not identified against which invoice it has been received, so the entry will be a bank and cash account will be debit to unidentified receipts. And once this is recognized, so this will be reversed, and the balance in this temporary account of unidentified receipts will become zero. So particularly account analysis method is used here. Now, in my first module, that is accounts reconciliation compliance module, there are three methods. First is balance comparison, second is account analysis, and third is my variance analysis. So in the second method, that is account analysis method, the preparer only provide for the explanations that why, what is the reason of this amount that is there in this temporarily in this unidentified receipts. And then when he provides for the explanation and shifts the balance to the account to which it belongs, it will get automatically to zero. Okay, so this was the explanation of it. So I will go to my application now, and we'll see how to do the reconciliation of this. So the first step is to create a format. So the format is already created. We are going to use the already created format. From application, I will go to configuration. And then under configuration, I will choose my format. So the format that will be used is zero balance accounts. Now I will open this. Now, why the name is zero balance accounts? Because this is a temporary account, and finally the balances will be transferred to the account to which that particular amount belongs. So this will become zero, and the balances in this account will become zero. That's why it is called zero balance account, and it is a temporary account, kind of suspense account. And the method used is, of course, account analysis. We are not going to compare two things in this, like the source system or the subsystem. We are not going to compare any two things. We are only going to provide balances in the source system, and only in one system, and then the preparer will provide the explanations for that. So this is my balance summary tab, and this is the balance explanations and adjustments tab. Here the preparer will provide for the balance explanations, and here he will provide for the adjustments. So you can see source system, there is only one system. Then this is the balance explanation tab, and this is the adjustments tab. Then all other things are same. When I open this balance explanations tab, this is the short description, transaction date, close date. So all these attributes will be used by the preparer to provide for the explanations. Okay. And in the adjustments tab also, these are same. So I'm not going to change anything in this. I'll just cancel this. So I will use this particular format to my profile. So we'll quickly make a profile now. Add a new profile. Name I will provide. Okay. The process that is used is balance sheet because it is an accounts receivable item. We have received the amount from our customer. So it is our sales only. Okay, so it is an accounts receivable item. Risk rating, I can choose any according to my organization. Then account type, I will go to assets and will choose accounts receivable. Normal balance is a debit because accounts receivable has a debit balance. Then organizational unit, I will select North America. Format is important here. We have seen that zero balance format. So we will use this account analysis method format. And I'm just going to click on OK. Then the method I will choose as balance is 0, and reconciliation adjustments, the days I will provide are 10. For balance explanations also 10 days. So this is the first page, and then I will go to workflow. Okay, I'll select my preparer from here. Click on OK. Frequency is monthly. Offset days 1 and then 2 days for duration. Reviewer I will select from here. Monthly, and duration I can provide for 2 days. Then I will go to currency tab. From here I will select my rate type, and then I will choose my currency. It is functional USD. Okay. Then from here I will provide for a rule. I will click on add. The rule is prevent reconciliation submission. Then I will create a condition. Okay, I'll provide a description for this first. The reconciliation shall not be submitted until an attachment of all the invoices that have the difference are not attached. Okay, so this is the description of the rule. It means that until and unless the preparer attach some explanation for the invoices, he will not be allowed to submit the reconciliation. So let's see how it works. Okay, I'm not going to provide for any message here, but I can provide a message like, please attach the invoices that contain the difference with reasonable explanation pertaining to the difference of the invoices revenue amounts. Okay, so from here I'm going to create a condition. So I'll just find out. Attachments total count less than 1. So this condition has been created. It means that until and unless at least one attachment is attached, it won't be able, the preparer won't be able to submit the reconciliation. Fine. So I'll click on OK and save this. So now that we have created the profile, we are going to quickly import the balances into the period. So I'll select December period. From the Actions tab, I'm going to import pre-map data, import pre-map balances. I will choose my file from here. This is my file. Balance type is so system only because we are importing balances into one system only. Period is December. Currency bucket is functional. File delimiter is comma. Then I will click on import. I can see the progress from the data load results. So as you can see that it has been completed without any errors. Okay, the import has been done. So we will quickly create a reconciliation for this profile. Let me search my profile. This is my profile. Okay, so I'm going to create a reconciliation for this. And this is the period June. I will select December. I can see that the balances have been imported. The file that I have used is this. This is my Excel file. The reconciliation account ID is 303, the name that I've given to my profile ID. Currency code is USD and the amount is 25,000. So this was the Excel file that I have used and imported the balances into my source system. Okay. So the balances have been imported into the particular period. Now I will create a reconciliation for this profile. So I'm going to select this profile, go to Actions tab, and then create reconciliations for the December period because I have imported balances in the December period. So I will select December and then apply. So the process is in progress. So the process is completed and the balances that have been copied are successfully copied. I'll close this. I will check my reconciliation card. For the period of December. I will search for my profile. So as you can see, the reconciliation has been created. Yeah. So there are unexplained differences because obviously we have imported the balances in one system and this 25,000 stands unexplained. So the preparer is going to just attach, provide for an attachment and give the explanation for this 25,000 rupees amount. So what I have to do is I will log in as Frank Taylor because he is my preparer. I'll just log out from here. And I will log in as Frank Taylor. So I'll go to reconciliations card and find for my reconciliation. This is my reconciliation for which Frank Taylor has to provide explanations. So I will go to balance adjustments tab. Okay, and click on add icon. Then I will provide for a short description. Okay, date, I will use this only. I'm not using close date because these tabs are not compulsory. Then I'm going to provide for rupees 25,000. Okay, and just save this. Now this has been saved, but if I'll try to submit this, then you can see the error here. Submission not allowed for the following reasons. Attachments total count less than 1. Now the preparer has to provide an explanation for this. So I'm going to open my Excel sheet. Okay, so this is the explanations that the preparer has to attach. Okay, so basically these were the invoices, and now they have been recognized, they have been found, and the balance of these 25,000 explanations are given here, the invoice number, everything. Okay, customer ID and everything. So I'll go to my application again. Yeah, and then from here I'm going to provide for the attachment. I will attach it, choose my file from here. This is my Excel file. Quickly open this, and I'll choose tick on carry forward. So this explanation will be carried forward for the next reconciliations as well. We click on OK, and as you can see, this has been attached. Now I will submit it. So yes, now it allowed me to submit the reconciliation. So you can see the status that the reconciliation has been submitted, and now it is open with reviewer. So this is the complete process of this particular rule, prevent reconciliation submission rule, along with the attachments and the account analysis method. So yeah, thank you so much.